to item 8 of the financial agenda, which is the financial performance report. Welcome to Sarah, who's here to speak to her report. We do have a motion that I will be moving and Councillor Bidder will be seconding. And the additions to the motion, the intention is to provide greater specificity in terms of what we're being asked to approve. And this is, again, one of the things that we are wanting to do to ensure things are more accessible and transparent across the board for elected members and also for the public. Sarah.
So this report presents Council's financial performance for the 6 months to 31st of December 2025 and provides an update on a year-to-date position against our annual plan and our long-term plan financial strategies. So overall, the first half of the year reflects strong underlying operational performance, with Council tracking ahead of budget on core operations. Net everyday operating costs are 8.3 million under budget, supported by 3.8 million of higher than planned revenue, demonstrating continued discipline and cost control and revenue management. So this positive operating position is partly offset by higher net financing costs of 5.5 million and depreciation timing of 2 million, reflecting the ongoing impact of interest rate movements and accounting timing difference rather than any changes in service delivery. Importantly, despite these pressures, the balancing the books position is currently forecast to be on budget by year end, with strong operational performance expected to continue offsetting the financing and depreciation impacts. Capital expenditure is tracking behind budget year to date, largely due to phasing and seasonality. However, delivery is still expected to be broadly in line with plan by the end of the financial year. I do have a correction to note in paragraph 8, where the 285 million should read 277 million. It was an update oversight upon finalisation. Net debt is forecast to be slightly higher compared to annual plan. This is on account of some brought forward phasing of approved long-term plan capital spend, offset by 5 million of improved operating cash contributions, $10 million lower opening balance based on June 25 actuals, and the funding of Airway establishment funding until the point of transfer on the 1st of July. So the report seeks the committee's recommendation to Council on the approval of the capital movements, significant forecast adjustments, and the revised financial strategy positions for debt to revenue, net debt, and balancing the books. So overall, this is a solid mid-year result, showing good financial control while highlighting areas that will continue to require close monitoring throughout the second half of the year. I'm happy to take questions.
Thank you. Does anyone have any questions? Oh, sorry. Councillor Bidder.
Rachel. Sarah, good report, and I like lots of greens. There's a few red ones, which is good to know as well, because we want to see where problems are. Net external debt, you mentioned Airway as part of that. Mm-hmm. Is it correct that the Airway component of the red dot disappears on the 1st of July?
Essentially, it becomes we don't necessarily pass all of the gross debt over from LGFA, for instance, we still hold that, but it will be part of Airway's debt that is owed to us and will be repaid to us, yes. Right.
So from the 1st of July, our net external debt will look significantly better than what's shown here?
When you account for Airway's portion of that, yes.
Thank you.
Councillor Moroney.
Thank you, Chair. Some guidance on whether this is too much of a detailed question for this particular report, but I wondered if there was any update on the renewal or a decision around the Hillcrest Library capital project.
I don't have any further information, but Helen may have some further information.
We have a workshop scheduled for the 25th of March. Councillor Moroney will go into it in more detail at that time.
Thank you.
Casey Cox.
Thank you, Sarah. Just a question following on from Councillor Bitters. The debt portion for Airway, that will be repaid over a period of time, is that correct?
Paid over 8 6-monthly instalments.
Right, okay, thank you. Yeah.
Donald.
Thank you. So just tracking through what you said, Sarah, thank you very much for your report and for your explanation. Debt's going to be up, but that's offset by a number of other things. So I'm curious around how our capital sequencing assumptions and our revenue forecasts have been updated. Have they been updated, or are we still tracking against what we originally said at the beginning of the year rather than where we are now?
To get to the forecast assumption, we have updated where we think we are going to be.
Councillor McDonald, can I make an observation? We have historically not spent a lot of time on looking at the phasing of the capital program from a budget perspective. So one of the areas we're looking for improvement is for that to be more accurate. So what Sarah's pointing out is, although there is a gap between the actual year to date and the budget, it's predominantly because we had not put the time in at the start of the year to improve that process and know exactly where we would be at this time of year. We know that the program continues to track in line with standard seasonality, and therefore we do expect it to be on track by the end of the year.
Thank you.
Sarah, for your report. Just two questions. One to you, Sarah, and then one to the chair on the motion. The increase to finance costs and lower DCs, are you expecting this to continue, or is this sort of a temporary timing issue?
We are seeing an improvement as in closer to budget as we go towards the end of the year. So that's a timing factor of when particularly swaps come off and we see that improvement.
Yeah.
So yes to that. And sorry, what was the question with DCs?
Oh, no, it was related. The reports is indicating increase to finance cost and a softening of DC revenue coming in. So it's the same question really. Are they temporary timing issues, or are we expecting this to be something that we're going to have to look at in terms of readjusting budgets?
Yeah, well, for forecast for the DCs, we have had a softening to date, and we're not expecting that to significantly continue for the remainder of the year.
Okay, thank you. And just a question, and I apologise, Chair, through the thousands of emails that were going backwards and forwards, you did send out this motion, which is considerably longer than the staff recommendation. Is there anything materially changed from your motion to the staff recommendation?
All that is in red is what the staff have indicated they are specifically wanting to be approved from the actual body of the report. And the intention is that elected members and the public don't have to move between one report to another to work out exactly what we're being asked to approve.
Great, thank you.
Councillor Liu.
Thank you, Chair. My question to our CFO, given the scale of our capital program and current debt levels, what specific financial controls and prioritization measures are in place to ensure that we minimize pressure on future rate increase, particularly during the current cost of living challenges? Thank you.
So thank you, Councillor Liu. I think the critical issue here is when we go through our standard planning processes, that really sets the direction on how, as councillors, you're choosing to balance the multiple constraints of funding pressure versus service delivery versus growth, demands from central government, etc. But we always look at that, really carefully. The one thing I would note is, although the net external debt is over what we originally planned in the annual plan when we set it last year, it is significantly below what we said it would be when we struck the LTP. So I think that provides some relief for us as we continue to go forward. Some of that will be mixed between what we do and what EY does, but I think it's important to recognise that we are already significantly below our debt position that we had expected.
Thank you.
I have a question, and this is not to be, not to trip you up, Gary, but I suppose the newly elected council is a message from the public that they were not happy with the LTP or with the rates increases that were provided for in that document. And the question is, what are the constraints that impact on our ability at this point in time to contain debt to the end of the financial year, or to stop our debt rising between now and the end of the financial year? What would we have to do to achieve that?
Purely between the position we're at on a year-to-date basis versus where we are to the end of the year, I think it would be difficult to constrain it to any material level, mostly because the commitment to that delivery is set within the annual plan, and management has, gone through that process. In the capital program in particular, there are large lead times. So if you wanted to truly reduce debt or hold it where it is, you would have to significantly constrain the capital program. Given where we are in delivery of that capital program, if you were to do that, and it wasn't through pure deferral, you would be facing significant write-off losses against the capital program, which I think would be a worse outcome than simply tracking to the debt, given that it's less than what was in the LTP.
Thank you. Councillor Mead.
Thank you, Chair Corrales. Gary, our personnel costs are forecast to increase over this next coming year. I understand that last year we had a 12 to 15% vacancy level, which was extremely high at times. We've got a CPI running of about 3.1, and staff costs have gone up about 10%. Is that due to replacing the staff that had the holes there, or is it some other fact that we can look at the moment?
Yes, there is definitely a decrease in the vacancy factor that we have this year, and so that is, so currently it's tracking about 9%, so you'll see that's quite a significant drop in vacancies. So filling those same positions, the staff establishment of the actual positions has not changed significantly.
Thank you.
Councillor Casey Cox.
Thank you. Can you just remind me when in the long-term plan we're expecting to balance our books by? Was it it's next year, wasn't it?
Correct.
Yeah. Okay. Thank you.
I have one final question, and that is, what comments would you make about the impact of our S&P credit rating and any flow-on effect for us in this space?
So we are tracking well to budget for our actuals to budget, and that is one of the measures that S&P does look at. What is your performance against what you expected, and building that history of performance into that. The other aspect, a couple of other aspects that go into that, firstly is the amount of capital growth that we are investing in, and therefore the high level of indebtedness, and against the lack of other revenue potentially until those growth areas come on board to support that. So being a high growth council, that's unlikely to change. The other aspect that was included in S&P's rating considerations was the certainty around central government policy in regards to local government. And I guess with the finalisation sort of the waters reform, that part of that there's more certainty around that, with potential other governance reforms such as regional council that may feed into greater uncertainty.
And rates capping. S&P are quite negative about that. We're around revenue.
Thank you for that. Councillor Mead.
Sorry, Councillor Chair Corrales. This may be in this one or not, but there's no forecast revenue in the current year for interest. We had 15.1 last year in F25. Is there a reason for the
So
the non-forecast of interest?
The interest revenue is included in the net interest cost, so we've reported it as a single line, so it's both the gross interest and the net and the interest revenue. Because of the way we manage our treasury and we have to maintain our liquidity with term deposits and stuff, it really is a way of reporting the overall cost of running our
So it's still there,
borrowings.
it's just a different way around.
Yes.
Yeah. Councillor Mee, can I make an observation on page 247 of the agenda where we actually detail the treasury?
Yeah.
I do think we have an opportunity in the next version of this report to show the separation of the two, so that people can see what the different components are. But I agree with Sarah's point strongly that looking at net interest is a much more effective way of judging performance.
Thank you, Gary. Thank you, Sarah.
Can I just offer a point of clarification to Councillor Casey Cox's balancing the books measure? The year 3 return to balancing the books neutral was for the LTP when we had waters in year 3. That's not the same position we're presenting within the LTPA amendment without waters. So under that, we return to balancing the books in year 4, not in year 3.
Is it next year then?
So LTP presented at negative 24 million, but it substantially shifts because of the way the revenue between us and EOI moves.
Thompson.
Thank you. Following on from the question around balancing the books, we've had discussions around looking at treating the depreciation costs of growth infrastructure that current residents are not currently utilising, and also potentially treating stormwater somewhat differently. But outside of that, then we still see there are some everyday operating costs that are not being covered by everyday revenue. I'm wondering if there's a way to kind of make that, if we're going to look at treating depreciation somewhat differently to what we have in the past, how we make sure that we separate out so we can see, aside from those specific areas of depreciation, whether we are covering our everyday costs adequately.
So the financial strategies and calculations that we're going to be looking to use will definitely identify that operating costs and how that is covered.
Okay, cool. Yeah, thank you. So future reporting. Okay.
Yes.
Thank you.
Councillor Casey Cox.
Yeah, just on the issue of depreciation and treating it differently. I guess just a question, could we, I guess, have some more focus on, for our community more so, how we are intending to change how we might treat depreciation? And also, could we talk with them more about the concept of intergenerational equity and how we understand that and how we apply that, and also just talk more generally about it? Yeah.
I think there's a significant opportunity in the long-term plan process to enable that discussion and increase the understanding.
Okay. Thank you.
Thank you. If there are no other questions, we'll move to debate, and I'll start off. First of all, just really want to congratulate the team and thank Gary and Sarah for the improvements in our financial reporting, particularly around the level of detail and the transparency. And also, I want to acknowledge that they're very clear that this is a journey and that we have more improvements to make, and they have been tasked with implementing those improvements around transparency and accessibility of information over the next 6 to 9 months. And what you heard in the exchange that has just happened is that willingness to accommodate requests for different levels of detail around different things. So this will be a work in progress. I do want to acknowledge the organisation, all of the general managers, for their efforts in keeping the net operating costs within budget. Some highs, some lows in different spaces, and some of this is outside of our control, but this positive metric has not gone unnoticed, so thank you. outside of continued discipline around our net operating costs, I do remain concerned about debt and continuing down a path of spending that was set by the previous council and which necessitated in part the significant increase to rates which the community spoke so vocally, so vehemently about during the election. And I think Councillor Casey Cox picked this up, the strategy of using debt to ensure equitable distribution of the cost of significant and critical infrastructure across generations is well understood, perhaps by us but not necessarily the general public. However, in all of this, we can't lose sight of the fact that finance costs and the interest burden are borne by this community, and future residents will continue to have to bear that now and every year moving forward. So all of our spending decisions in the future, I'd like to have some visibility around this. All of this is why I am moving the motion. Thank you. Now to Councillor Bidder.
Thank you, Chair Rachel. Quarterly reports with more detailed financial information than we've had in the past, in a manner that is easier to read, with commentary to help the public understand, and made public at the same time as councillors receive it, is a good move for transparency. Our goal is to have these reports on their own webpage for the public, searchable within reports and comparable between historical reports. There is a small but important number of the public who take detailed interest in council finances and do offer elected members good advice. I acknowledge my own limitations in accounting, so independent external advice is valued. Naturally, we will focus on the red dots, but I do point out that there are a lot of green dots. Thank you to Gary and Sarah, and best wishes to Sarah on her new job. I have already told her that she will now be blamed for everything for at least 6 months.
Yeah, I agree. I'm no expert, so I really appreciate the reports and the clarity with which they're presented. I do want to also talk about debt a little bit and our increasing debt headroom, which I want to raise the issue because I think we need to have a better conversation about what we then look to do with that headroom if we look to do anything. There is some suggestion that it's great to have debt headroom because then you can respond to disasters, and that's awesome. But what I would really like to have a conversation about is how we use that debt headroom to prevent disasters from happening in the first place. So that would be something that I would be excited to engage with other councillors about, because I think, as we've all noted, the recent weather events and increasing extreme weather events, I think that's a very real conversation for us to have, and a really important one as governors. Thank you.
Thank you. Senior Councillor O'Leary.
Thank you, Chair. First of all, thank you to staff for the report and the ongoing improvements that are made. It's not an easy, finance is not an easy thing to report on. I am concerned with the 36 pages of questions to staff on the report. That is not sustainable and cannot continue. That would have come at considerable time. However, the questions are valuable. But this is where the improvement in the reporting must happen, because that's just not sustainable for the staff. I would also like to push back gently on the criticism of the debt levels and the current capital program. We are in the final year of the 3 years of the LTP, and it is a result of previous LTP that was very well canvassed with the community, and it was actually responding to the community. It was a point in time. It was before the cost of living crisis, it was before the extreme weather events that the country has had. So while I agree things have changed, I would just gently push back on the heavy criticism that we are getting. In 3 to 6 years' time, that council may criticise this council for our decisions in an LTP, because it is a point in time. Look, the report shows that we are inside our financial limits, that we are operating inside our financial strategy, and that, of course, is to come, that new work led by the CFO and the Mayor in terms of what our new financial strategy may direct us and our priorities through the LTP. The report does say that DCs are softening. That's a theme to be concerned about. Interest costs are higher than expected. That's a theme to be concerned about. But I thank the Chair for the motion, and I'm comfortable approving the revised position, noting that we do need to keep a sharp eye on these things. Thank you.
Thank you. Councillor Liu.
Thank you, Chair. I do support this report. It is encouraging to see the Council's core operating performance is improving. At the same time, I'm not criticizing, but we do need to be careful with high debt level and a significant capital program ahead. We must continue to prioritize spending carefully and ensure we are getting good value for money. Strong financial discipline and careful long-term planning are essential to protect Council's financial sustainability and minimize pressure on future rate increases. I do support the recommendation. Thank you.
Thank you, Councillor Liu. Councillor MacDonald.
Thank you, Chair. While I recognise that Council's financial performance is a journey, the report does highlight a structural tension, and I appreciate Senior Councillor O'Leary's comments in relation to debt and timing and how it was canvassed through the community. But debt rising while contributions are softening, it does change the risk profile. Now, I appreciate that we need to benchmark against something, but I'd also note that remaining within the previously adopted guardrails or budgets is not necessarily a good test of our current financial climate. The budgets were set under different economic conditions, and so now soft revenue and rising borrowing exposure suggest that both our policy settings and our implementation discipline require more tightening. Monitoring has to lead to recalibration, and I appreciate that time is the scarce resource, but we still need to make time for it. When revenue weakens, capital pacing should tighten. When borrowing rises, debt stabilisation should become the priority rather than continued momentum. I appreciate the comments made by Gary in relation to holding debt where it is and also the impact of significantly constraining our capital expenditure. However, we still have the issue of trajectory. If debt continues to rise while revenue softens, we risk entrenching a path that ratepayers cannot sustain. That requires us to be conservative now, not later. Thank you.
Thank you. Councillor Mead.
Thank you, Chair Rachel. I'd like to reiterate what Councillor Mesh was talking about, and the fact I know we've got plans, long-term plans and annual plans, but I believe as a council, staff and elected, we need a procedure in there where we can react to what's happening in the market at the time without having these really tight boundaries. Because as we know from the last LTP, things have changed since that was set, and they will change again in the next few years. I'm in full support of what we're doing, but we also need to be aware that we at times need to be able to move the goalposts when the market drives those sorts of things as a necessity, whether it's to debt or whether it's to income.
Councillor Moroney.
Oh, thank you, Chair. Just responding to some of the debate points that have been raised and thanking the staff for the financial report, very useful information. And just thinking about that issue that the last two speakers really have raised about what I would caution against is knee-jerk responses. This is why we have long-term planning, is because we have a long-term future to be thinking about. And I reflect on, some of the decisions I've seen in various councils over many years, and know that I think probably, I would hope to think that many people involved in Tamaki Makaurau in Auckland would regret very conservative and knee-jerk responses that have happened financially over the years, because they are now in a situation where that city will never catch up with not actually having anticipated growth and getting things in place at the right time. Of course, there is a very strong case for doing this in a really diligent way and making sure that we do it appropriately. But but actually responding to market signals is not the way to plan a good, robust community and city, in my view. So I just offer that perspective, because I don't want Hamilton to be Auckland, and I do not want Hamilton to be Wellington. I don't want Auckland to be. I don't want Hamilton to be Auckland in terms of transport issues, and I don't want Hamilton to be Wellington in terms of water issues. So that's really important context for us to think about, in my view, when we're considering all of this.
Do you want Hamilton to be the capital?
Councillor Thompson.
Thank you. I endorse the words of the previous speaker. I have to say I cringe whenever I see the news coming from Wellington at the moment around their wastewater problems. Dave McPherson used to, when he was on council, used to talk a lot about making sure that we are engaging in long-term planning and that we aren't having knee-jerk reactions, because when council pulled back significantly from investing in infrastructure to support growth over the GFC, they suddenly found that then they had a massive shortage of developer-ready land to build homes, and then there was a lot of catching up to do. So we have to be mindful that we don't then repeat a similar mistake, while of course being very of course, we need to be prudent in terms of how we invest in growth. And a lot of that is now going to sit with EOI, because they're taking over our biggest cost in the long-term plan, water infrastructure. But long-term planning is incredibly important. And as a council, actually, we're a lot better at that generally than government. We have 10 years plans, whereas they seem to work in yearly, at most 3-year cycles. Thank you.
If that's everybody, I think we can go to the vote. Who was seconding? Was it? I was moving, but Councillor Bitter was going to second. All in favour? Aye. Anyone against?
Carried unanimously.
Thank you. Let me just confer around timing, because we were scheduled to have the CCOs in Waikato, the airport, at 12 o'clock, but they're not here yet, and... They are? Oh, okay. Yeah, so I think we should bring them forward instead of the capital. Yeah. Presenting for that. Yeah. I don't think we'll get to it till after lunch, so we might just deal with the CCO agenda item, and then we will break for lunch, and we may break for lunch a little bit early, so we'll let you know if we're going to come back earlier than 1:15. Thank you, Kelly.
So through the chair, Sarah can speak to the wider report that is broader than Waikato Airport before we specifically focus on that.
Yeah. We're on to agenda item, I've got item 6, but and which is the CCO and subsidiary update report. Sarah will speak to the broader report, and then we have Mark Morgan, the CE of Waikato Region. What's that? Airport, yes. And the GM of Finance and Commercial, Scott Kendall, as well as Hamilton Waikato Tourism GM, Nicola Greenwell, all here to do a presentation and available to answer questions. So take it away, Sarah.
Thank you. So this item provides the committee with the CCO and subsidiary updates to support the committee's governance and shareholder oversight role, including meeting the council's statutory reporting requirements for the council-controlled organisations and subsidiaries. So this report brings together the financial performance reporting from Civic Financial Services, CoLab, Waikato Regional Airport Limited and Hamilton Waikato Tourism, alongside consideration of the draft statements of intent where shareholder feedback is required. So the focus for the committee is on assurance that statutory and service level reporting obligations are being met, that the entities are operating within their mandates, and that the council's expectations as a shareholder are clearly communicated. So we do have the representatives here from RAL and Waikato Tourism to speak to their reports, and the recommendation is that the committee receives the reports and endorses the statements of intent for shareholder feedback, subject to any feedback provided in this meeting. So I will hand over to Sean.
Thank you, Chair. I will just do a very quick introduction for Hamilton Airport and Hamilton Waikato Tourism. I just wanted to make a couple of observations, if I may, or really points of clarity, especially for those new councillors around the table. In the past, these reports have been presented to the Economic Development and Growth Committee primarily because of the fundamental economic outcome drivers that these operations deliver against for both the city and the region. I'd remind that councillors that there is a full briefing for all elected members of all shareholding councils of Waikato Regional Airport Limited coming up on the 5th of March, on Thursday the 5th of March, and I hope that as many of you that can attend that will do so, because it will give you a much bigger picture than you perhaps have had thus far, that, you know, in the briefings that you've had. Ordinarily, RAL report to you twice a year. On this one occasion today, they report their draft statement of intent and also their half-yearly report. They also report to the council, to this committee, towards the end of the year, the annual results just prior to their annual general meeting that is held in early November. Our relationship with Hamilton Waikato Tourism, I should stress that Hamilton Waikato Tourism is actually a subsidiary of the airport company. It is not a CCO in its own right. And our relationship with Hamilton Waikato Tourism, once again, is very much about economic outcomes that it drives through the visitor and major event industry. Our arrangement with them is actually quite independent. It's like a shared service between ourselves and other surrounding councils. And we have a purchase agreement with them that we operate on a 3-year basis that is linked to the long-term plans. So it's a very different relationship that we have with them. And I'll leave it at that. And I think I should hand over to Mark Morgan to cover off the airport. Thank you.
Thanks, Sean. Good afternoon. Well, it's almost good afternoon, not quite. Firstly, I'd like to acknowledge the Chair and the Mayor and the new council. This is the first time we have presented to you since your election late last year. Look, we'll try and give you a very brief update. We've only provided just a few slides. But I think what I would sort of state is that you have the half-year accounts and the draft SOI. It's been a pleasing half-year result for the group. It delivered a small trading profit, and Scott will give some context to that in a moment. That small trading profit without a reliance on land sales or valuation gains. Strong passenger growth in the 6-month period. There's been significant capital investment. We've invested about 12 million in the 6-month period. We'll talk a wee bit about that. And we have finalised our new 10-year strategy that was finalised with the board over the winter of last year. Those of you that have been around a while will recall that we did have a 10-year strategy that we wrote in 2018 through to 28. Because so much has changed, we've revisited particularly our aeronautical and property strategy, and we now have a new strategy taking us through from 26 through to 36. And I think the other key point I would make is that we, I guess as a company, transitioning from almost a diversification strategy, which has been our focus in recent years, to still maintaining that, but our key focus now is a growth strategy for the business. Sorry, if we could just go back to the very first slide, otherwise we might be taking you out of context. Thank you. If we could just stay on that slide. I guess whilst the economy is still somewhat delicate, rail is trading well, and the outlook remains, I think, positive for our business in both aeronautical and property. Next slide, thank you.
So the runway you've got on screen is based on full year outlook, so full year results, and obviously for the current year and the future, the outlook. The report you've got in front of you is for the half year, so just bridging the two documents and why the numbers are different. As Mark talked about, the half year result is actually quite pleasing, although it's only break even. So those of you that were here when international services were first talked about, coming back to the Waikato, be aware that there's quite a significant upfront investment with that, an interest and depreciation burden, a lot of startup costs in getting border agencies up and running. So we didn't actually expect to be back to break even or returning a surplus potentially till the end of 2027. We've done that almost 2 years ahead and within sort of 6 months of services launching. Primarily, we'll talk about the other growth opportunities that's brought about it as well. And that half-year result has, for the first time in a long time, had no land sale or property gains to bring it back to a break-even or profit result as well. It's actually the first time since 2019 that the airport in its own right has traded break-even or profitably, so quite a significant milestone for us. And then, yeah, you'll notice the rather marked increase in debt from 38 million up to 63 at year end. That just reflects investment we've had to finalise establishing international services, so they're into the aeronautical business and also into the non-aeronautical business, Titanium Park. It's, primarily, we've sold a lot of land previously as a land developer. We've grown as a business to a point where we can retain assets, invest in property and retain them. So we've now got significant building that's just about to be finished, where we will invest 17 million in that. We will retain that for a long-term annuity leasing income rather than just selling it on completion as being the traditional model. So we've moved from being a developer to an investor, and that obviously long-term sustainable income rather than selling the land once and realising the capital once. Just looking ahead quickly, next year you'll see 4 million of new revenue streams coming online. That's the full year effect of kind of the growth we've realised. So that's a mixture of landing charges from the additional aircraft coming, retail spend around the airport from passengers, eating and dining and parking with us. There's also significant new leasing, both in the commercial property space and there's obviously a number of new stakeholders at the airport, border agencies, ground handling companies and the like. So they'll contribute to the airport as well. And just go to the next slide, please. Just looking there, so we've got the dark blue and the light sort of green slides there. That's the past couple of years, and actually see sort of symptomatic of the economy and more globally engine maintenance issues that have impacted, I think, New Zealand, but globally have impacted many airlines. You actually see we had a small decline in passenger numbers. So to see the impact of international flights in the first full year come back in the purple box, it's about a 40% increase. But if you take the schedule we have today, which is a daily international service, we've since added a 5-day-a-week jet service from Air New Zealand. And since this slide was published, that is now a daily service. And then obviously Jetstar have also entered the domestic market out of Hamilton. So first time we've had competing airlines running jets on the domestic market. So see all up a 70% growth. If you take the schedule we've got now compared to the schedule we had sort of 8 months ago before Jetstar entered the international and the domestic market. So I think that's, probably symptomatic of the, or reflective of the success we've had in the past year or so. Yep.
Thanks. Next slide, please. Just a wee bit of context here around our property business. This is a photo. Those of you that may have been out near the airport recently along Rains Road, but this is a photo probably taken just a matter of weeks ago. It shows a complete new entry and the Asmus build there. Gives some context that that building is not a lot smaller than the terminal, so it gives you a sense of its size. And that's, as Scott mentioned, that will be retained on land we own. It's a 20-year lease. A very good tenant in Asmus, and great relationship in this build. And then the land, you can see the so Asmus is positioned on stage 1, and you can see the land behind the earthworks, which is stage 2. All of that work will be finished by May. The building will be actually finished in about 3 or 4 weeks. The rest of the development in about May, and that will open up 18 hectares for industrial commercial development. And the airport company will have invested about 30 million with Titanium Park by the time that work is completed in May. So I think we've timed, we believe, the market well. We haven't been in a position of requiring to sell land. The market has recovered and is recovering through 2026. So we'll have this land available on the shelf for all forms of development. And we already have a number of inquiries over the last few weeks. So the market is definitely responding to, I guess, economic conditions, lower interest rates, etc. So that's all very encouraging. So this still takes us, you may recall, those of you that have been with us on this journey, that our intention is to grow the balance sheet to $1 billion of assets by the mid-2030s, and this kind of development keeps us on track for that end. And I think there's also the strategic alignment with our aviation operations. So we've always somewhat argued that the property development isn't just commercial. It is a defensive strategy to support the aeronautical core of the company. And it also, we work very closely, of course, with the regulatory overlays, ensuring that our noise contours, safety zones, etc., that the infrastructure is compatible with the airport operation, and who best to control that but Titanium Park and the airport company. And I think the final point I'd make is that there's strong guardrails from a governance perspective, the board's expectation around how we complement both the division of capital to both ensure we're developing the airport assets as well as the property assets. Next slide, and this is just our final slide. And it's really just a summary, a reinforcement of our full year performance, as Scott mentioned, will be well ahead of budget and will be profitable, and we see no change to that assessment at this stage as we sort of enter into February. The international performance is strong. The domestic performance for aeronautical is strong as well. Our hotel is having a marked improvement. Again, it's responding, I think, to sort of the economic climate. Conferencing is growing, room rate is growing, and occupancy. So we're comfortable with the position of the hotel. And I think we remain very optimistic. We have, of course, seen Air New Zealand's announcement today in terms of its own profitability or loss in the first half year. So, you know, there is definitely shadows within the aviation industry and within the domestic network. So we're certainly very mindful of that, but I think Hamilton Airport's journey has been somewhat unique in terms of other regional airports that have perhaps been more reliant on Air New Zealand's performance and schedule. We have just refinanced the company, so we're in a good place to fund all of the opportunity ahead of us, and that really has put funding in place for the next couple of years based on the needs of the group. Thank you very much, Chair.
I think what we're proposing to do is to have Nicola come and join you and present her component of this presentation, and then we'll have questions from the elected members of all of you. There's a spare chair just there. Yes, thank you.
Do you want me to present from here or move?
Oh, you can move it if you, well, however you're comfortable. Yes. Yeah.
Red means go. Thank you. Didn't want to break any rules. Tēnā koutou katoa, ko Nicola Greenwald tōku ingoa. Just like to echo before I start into the report, Mark's sentiments. Welcome to our new councillors. Nice to see some great new faces here. Congratulations. And congratulations to our returning councillors. It's lovely to see your friendly and welcoming faces still here as well. In your report, you've got our first 6 months report activity on our report in your pack, and a longer version of the presentation that I'm going to use today, with a few extra slides that I don't usually include, but have included just for the sake of our newer members, to hopefully help understand and navigate the land of regional tourism organisations. Sounds simple, it's quite a complex little beast. So in our slides today, just wanted to acknowledge the visitor spend and what that means for our region. What we've got there is the electronic card transactions, and so it's only that, not pre-purchase online or cash. A lot of people don't often understand what that means to our region. So you'll see in your pack, not here on the screen, but we're 4th for domestic spend behind Auckland, Christchurch and Wellington. So we really are up there. We're 5th for international visitor spend, which is not often understood by our communities. Again, behind Auckland, Queenstown, Christchurch and Wellington. Bed nights there, we can see 1.23 million guest nights in our commercial accommodation only. Short-term rentals are a little more challenging to get data of what bed nights they are, but we know that for our region we're hitting 59% in the last 12 months, which is 5% better than the previous 12 months. So growing that market as well. For the guest nights, commercial guest nights, we lay at 7th across the country. Business events, you can see the growth there. It is dropping a little bit, and that's because of the competition around the country, and because of the retrenching in the economy. The events are being held, but sometimes they're not as long, or they're not sending as many people to the business events. But we still retain our 4th position for that, behind Auckland, Wellington and Christchurch. Our goal as your regional tourism organisation continues to be attracting visitors, having them encourage them to explore deeper and stay longer, and therefore our work supports the businesses to be viable, meaning employment within our communities. That's what we do. I think we'll move on to the next slide, please. So there's a lot of numbers on here, which I'm not actually going to go into, but it's the analytics around our second Get Lost campaign into Auckland. That was in spring. So that we're already in our 3rd iteration of Get Lost right now, February and March. We're in market in Auckland and Christchurch to support the new jet services from Christchurch. So we didn't do Christchurch last year, but we have included that this year, including fairly substantial amounts of billboards around the Christchurch airport and the CBD this weekend to align with Electric Avenue and the numbers that will be there. I'm going to move on to the next one, please. This is our first campaign into Australia, so 1 flight to reach the central North Island. So the first campaign, November and December, was in collaboration with Bay of Plenty and Rotorua, and the analytics there and the response rate there is in front of you, and we're really pleased with those results. To put that in context, the country now, just the new data just out for December, we've just reached the 3.5 million international visitors for the 12 months. That's 90% of where we were for 2019. Now, Central Government's Minister of Tourism and Hospitality's goal and challenge to us all is to reach 100% by the end of this calendar year. So that's why we've seen a lot more initiatives coming out from Central Government to support tourism and major events, including boost funding. So what we've done with that campaign, 1 flight, I hope you've seen it in your report and saw it in the media anyway, that our own application for regional tourism boost funding was successful to amplify this campaign. So for this one, we're working with Taupo, Taranaki and Ruapehu, and we have also wrapped in Waitomo operators, given it's central government funding, not our ratepayer funding. And we're in campaign right now into Sydney and Gold Coast. Have been live for a week and a half through the Meta and normal digital channels, and we went live on Monday through Jetstar Assets. So we've got some big audacious goals on what that will mean. It is to attract visitors to be bums on seats between April and June. That's the goal, that's the challenge from Central Government. So along with the activity with digital campaign and Jetstar, we also need to include hospitality. That's part of the criteria. So we're working with First Table Restaurant Association, creating a food journey guide, and we've just hosted a culinary curator from Sydney. So there's a lot going on in supporting those Sydney and Gold Coast flights. Overall, the first half of the year, look, it's been fantastic, and I think that we've really had some great opportunities to showcase our beautiful region, a wonderful city. There's plenty more I'd love to share with you all, so there's always lots to talk about the work that we do, what tourism means for the region, and the passion we've got for it. So I know your agenda is really tight, but putting it out there, if anyone would like to learn more, I'm more than happy to chew your ear off for some time. Thank you for your ongoing support.
I was just thinking. Okay, so I've got Amy to put the motion up, and we'll now move into question time. What I'm going to suggest is that we have a round of questions for Mark and Scott and Nicola, and then if anyone has any questions of Sarah in relation to the other CCO reports, that we deal with that once we're finished with, so that these people, kind people who accommodated our change in agenda today, can get on with their busy days. Are there any questions? Councillor Liu.
Thank you, Chair. My question to Mark, please. I was going to ask, what is the long-term strategy to ensure the financial sustainability once the available land for development largely utilized? But Scott just mentioned you are moving from a developer to an investor, so you're leasing the property. So can you then please clarify whether the current and projected lease income will be sufficient to support airport's long-term financial sustainability, particularly once the land development opportunity become more limited?
Thank you for the question. First, I think I'll just roll back. When we bought the farm, and then when we elected to develop the farm, we did a lot of modelling with PwC, and we determined essentially that we would develop in this way. We would develop and sell a third of the land. We would develop and hold a third of the land, so design builds, and a third we would develop and potentially sell the built investment. To date, the inquiry has been ironically for leasing, so to develop and hold. Our intention will be to develop and hold as much as we can. I think if we look at the land, and I think the other point I'd like to continually make is we are a net acquirer. We have bought more land than we have ever sold. So we've bought about 130 hectares and sold about 30 hectares. So I think that's a critical point here, and we will continue to buy land. There are still significant land holdings around us that we will always retain an interest in acquiring. So, but the land we've got, the supply is probably anything up to 20 years of supply, depending on take-up rates. That's just on the current land we own. So I think, and if a lot of that, and I think I won't go into too many of the commercial details given the forum, but we are very mindful that solid leases provide an opportunity to, and whilst our debt level's increasing, our intention is that ultimately our debt levels will reduce as the income, the lease income, is greater than the development required. Does that answer your question for you?
Thank you. I'm happy with the answer from a shareholder's perspective. Thank you.
Thank you.
Councillor Moroney.
Thank you, and congratulations on the performance for the 6 months. It's must be very exciting to see that come about. I'm probably going to get down in the weeds a little bit more. So it's great to see that there's that increase in passenger numbers from both your perspectives, and wanting to understand around what what you hear about the lack of public transport from the airport and the impact that that has on your services, probably from both perspectives, and any ideas that you've got about how we might resolve that.
Sure. Look, it's a very topical question at the moment and an observation. What I would say is that briefly history, and then what we're trying to do about it. The brief history, I think, is that that the Regional Council has tried a couple of trials running bus services to the airport over recent years, and they haven't been commercially successful, and they have ceased those services. Now, that was before we had international services and before we had increased volumes. My team had a meeting with the Regional Council actually yesterday, and I and myself and a couple of others of our executives have a meeting with Chris McLean and his team actually next week to discuss what can we do about this, because this is primarily the responsibility of the Regional Council under the transport sort of responsibilities. We're there to assist where we can, but we need the support of the Regional Council to drive this initiative. We are concerned that there are people that are pedestrians around state highways, and that's not an ideal outcome. So we are committed to trying to find a resolution, and we'll work with the Regional Council on that. Of course, they, as you would know, have funding constraints, and they are due for major funding review of their bus services in 2027. I want to see how we can bring that forward and what solutions are there. So we're worried about it, but our responsibility is to work with the Regional Council and see what solutions we can find.
Are you able to partner in any way in that solution? Is there anything you can bring to the table?
Well, I think I would say to you that we understand the issue, and we will have those conversations, but I'm not prepared to discuss publicly what we might agree to commercially with the council. Sure. But I think suffice to say, we're not saying it is only the Regional Council's responsibility. I think there is a collective responsibility, and we understand you as a shareholder and what our other shareholders would like to see happen. We've just got to see how we can navigate a solution.
Thank you.
But it is a matter of urgency for us.
Great, thank you. And my second question is a little related. Are there any further plans, and congratulations on the Australian connection to the international part of what you're doing. Are there any plans to increase or change that?
Look, absolutely. Look, we have invested in terms of resources. So we now have a group GM Aeronautical Growth and Marketing. It's a new role. Michelle joined us late last year. Yes, our intention is I think the Jetstar services have now given us a platform for conversations that historically we wouldn't have been necessarily able to have. I think, like all airlines, there's got to be. It's often not only, as I'm finding out, it's not only the demand, if you like. There's also many aspects to putting together a new route. It's dependent on the airlines. Capability, it depends on the decisions around route development, depends on the airport that you might be flying to and their capability to accept new services. So it is quite a complex business. But look, I think our view is we have set a growth as part of our strategy with the board. We have put a KPI in, which is to endeavour to bring 3 new services to the region within 3 years. So we're very active in it. We will be doing a lot of research this year to understand the market, the catchment, the leakage and the opportunity, because as we know, we leak a lot of passenger opportunity to Auckland. So yes, a lot of work going on to prepare us, and also if we're talking about Jetstar for a moment, they also have to work through, they've established a lot of new routes in the last 12 months, probably somewhere in the order of 25 or so, between Australia, New Zealand, Trans-Tasman and into Asia. So I think we just work through that process, but we will be talking, of course, to other airlines. And as I say, but most importantly, our responsibility is to make sure these two routes are successful, and because that will set the future course.
And just finally from me, today's announcement with Air New Zealand not looking too flash on the financial front for themselves. Their regional offering has come under quite a lot of criticism. Do you see any go forward in that? I mean, I notice as a soon to not be frequent flyer that the Hamilton routes are very, very full occupancy wise, and there's been a reduction in the frequency if you go back to pre-COVID days. Is there any movement in that space?
Look, obviously I would not pretend or speak on behalf of Air New Zealand, but what was said publicly today, and I think is in the public forum, is that they're undertaking a major strategic review of their domestic operation. And I would imagine over the next couple of months we'll get some clarity around. So what does that mean? And it's but it's clearly there's clearly some challenges in regional New Zealand to support routes. But what I would say for Hamilton, the Hamilton currently with Air New Zealand, our Hamilton Wellington and Hamilton Christchurch are two of their strongest performing routes nationally. So, but yeah, there is I think some wider considerations for the industry around the system costs, and that not only the airline but that we're all facing. So it is a challenge for the airline and a challenge for us.
Thank you.
Just want to note that we are going to have a workshop in the near future, so the opportunity, I guess, for more fulsome answers could perhaps come in that forum. And I'm just saying this because I got a list of people who have questions of you. They're dying to ask them, and we've got 3 minutes. I'm not going to hold us to our 3 minutes, obviously, but yes, you can read between the lines. Thank you. So, Councillor Mead.
Yeah, I'm probably one of those ones got a number of questions, but I'd like to break out into HWT separate from airport if I can. The first one is, will HCC receive a dividend this year?
Look, that's not a decision for myself. That is a decision for the board. But look, what I would say to you is that the board made the decision to pay a dividend last year. And that was previously on the understanding that dividends wouldn't be paid while we were establishing the international services, but the board still did make that dividend payment last year. So I think the board will navigate the expectations of the shareholders and the investment required in the company. But I think that has set a tone.
Second question is, who owns the land and buildings of Jet Park Hotel?
We do.
And what's the percentage yield at the moment? And should that be shown on the balance sheet as a separate income?
Scott, would you like to make a comment?
So I probably couldn't tell you because there's the land and buildings owned in one company and we report as a group, so we don't have consolidated financial statements, but it is in line with market. It's valued based on an capitalised income basis, and that based on a market rate, and we haven't seen a deterioration in that, so pretty consistent with market rates. The income from it's reflected in our profit and loss statement, so part of that trading operating revenue is from the hotel, and equally so the expenses.
Yeah, because it's shown on your sheet as a separate entity, so I thought it should show as a separate income.
Yeah, so the financial statements you've got cover the whole group, so they cover the airport, Titanium Park, Jet Park, and Hamilton Waikato Tourism.
Understand that, yeah, but if you're going to show them separately, they should be shown as a separate income level for us to see as shareholders.
That's in the annual report does disaggregate that. Typically at half year we've not.
Third one I want to go to is the airport, and it's again on funding things. The airport's got an asset value of 340 million, looking to head towards $1 billion. Stakeholder equity of 276 million, that's 50% shareholding at 138. Our property value increased from 89 to 135 in the last year. We've sold no property, but it's growing. The current gross yield was 3.2%, and net yield was 0.0035%, with an expense ratio of 99.89%. So what it means, not profit margin of 11 cents. I'm worried about the fact that last year was more than that, it's dropping, and a return to shareholders, who are the key ports of having a business as a CCO, for me, needs to improve. That's a question. How can we improve it?
Chair, I'll leave this up to you, but this is not a 10-second answer, so I'm happy to address this at the shareholder meeting.
Can you distill that into a succinct question?
Sure can.
Yep.
How can we improve the return to us as shareholders?
Again, what I would say is that the 5 shareholding councils agreed with the course of action a number of years ago in terms of the direction we have taken. They signed off on the strategy, and we've made it very clear during that period that the intention, and Scott's just indicated to you, that the aeronautical business has not been profitable. We've got the aeronautical business profitable, and we are investing for the long term, and those returns will follow. But in order to do that, we've had to start from a negative position and work forward. And I guess I can't put it any simply than that. We could invest less, and the board could determine to pay greater dividends, but the decision strategically with the shareholders was to invest for the future.
If I could just add, Chair, the briefing that we had prepared will talk about this in much more
Yes.
detail.
Yes.
But I would quickly say we need to be clear on the trajectory of the business, where it started from
Yes.
a number of years ago to where it is now and to where it's headed. It's probably the only regional airport in the country that washes its own face. Other councils fund them hugely. So we are on a moving trajectory to get, I suspect, to where Councillor Mead wants us to be.
Yes. Do you have another question, Councillor Mead?
Not on that one.
Okay, would you like to go to?
HWT?
Yes.
Just a question on the information we're getting there in numbers. We talk about food and tourism-related electronic card transitions, tourism and stays here. How can that, is that provable by the people who come out of town to do business in Hamilton, or the restaurant cards that locals do there? Are they differentiated between the two, and how?
Yeah, they are. So that's a really big data question with MB. So it's a great big database in the background. They provide the data for all of the tourism sector up and down the country. So that's the same data set that any other RTO are using. So they cleverly in the background, Big Brother, understand where you typically use your card. That's your home base. If you go outside of that after a 40-kilometre radius, you're now deemed a visitor. If you travel for work, so you are travelling a distance for work, you're typically buying a coffee, your lunch, whatever, it also picks up that's a place of work. So it would be outside of that you would be then a visitor. It's quite a tangled data question.
Very confused by me.
Yeah, I know. The tourism data is quite a challenge to understand. We have some data from MB, the spend, and the guest nights is another data set. We work with Stats NZ for their data set as well. And each of them are quite challenging. Nothing provides a pure, perfect solution and picture of what the visitor sector means. But in the background, it does take into account of where you typically spend and use your card. Does that help?
Yeah, that'll do. That's right. Well, if
Strange.
There is a lot.
Thanks, Madam Chair. My question is to Nicola, the Waikato Tourism. Just got a few questions. The first one is I've observed the excellent work that you and your team have been doing, so thank you, and the energy you bring to it. I've also observed the impressive work that Waikato Screen have been doing in terms of bringing millions of dollars into our region. What, if any, conversations have you had with Waikato Screen about potentially working together?
So when there's an opportunity that works together, we do work together. They're often quite different approaches though. For Screen, it is bringing in production for that screen item, that project, where we're looking at the longevity of the visitation behind that as well. Where it's a tourism product or a tourism content production, we work directly often with those production houses or with Tourism New Zealand. So there is some interwovenness, but also, there's an overlapping of the bubble, but it's not perfect overlapping, that's for sure.
Okay, thank you. I appreciate your willingness to, to explore opportunities.
Yeah.
Have you explored any opportunities around a co-location at your premises for Waikato Screen? I guess what I'm going for is, I've been seeing the good work they've been doing and realise that their funding is primarily based on the Waikato Regional Council funding. That will run out at some point. I'd like to see Waikato Screen continue, and I think it would be useful to explore some sort of formal arrangement potentially.
Have a time constraints, and I think there'll be the opportunity for broader questions of both the airport and Waikato Tourism. But if we could just keep our questions to matters that pertain to the motion, which is in relation to their financial report for the last 6 months, and also their statement of intent, just so that we get through the agenda. But I think you've made your point. And this is a conversation to be picked up, not just amongst elected members, but also by the airport and Waikato Tourism. Do you have another question?
No. Do you want to respond to that one or leave that one? Obviously, leave it till the...
There's a lot of history with that as well, and there's opportunities ahead. Always open to talking about new opportunities. Always open.
Yes. Yes.
Thank you.
Okay, excellent.
Listening to that guidance, I'm going to save my question for the workshop.
Councillor Casey Cox.
Thank you. Just reading your statement of intent, it's good to see the commitment to the ongoing carbon work. Just a question on that. Where can I find evidence that you're on track to be net zero by 2050? Is that documented somewhere?
Again, I think this is, if you are joining us on the 5th, we can, but look, I think these are aspirational goals, 2050, and I think that you'll already see there is some challenge in not only in aviation, but in many sectors to reach those aspirations for 2050. You've seen recently we were part of the Air New Zealand electric aircraft initiative that's just spent 6 months in New Zealand testing. The ability of Hamilton Airport, because ultimately, as you're aware, with net zero, we will be reliant on partners, and for an airport, the key will be the airlines. And if the airlines are unable to solve the carbon challenge sufficiently, then by association, airport companies will struggle to meet those. So we are wedded really to the aspirations of the technology being solved by the airlines.
Okay, so it's aspirational only, there's no real plan?
No, I didn't say that. There is, yes, of course, like anywhere in the world, the goals around carbon emissions and reductions are aspirational. I think we've seen that. We're already at level 4. We're one of only maybe 3 or 4 regional airports in New Zealand that have even met level 4. So we are ahead of the curve in terms of what we can do, but to move past level 4 is really requires heavily on partner success and involvement, as you may well be aware. So that's where, but our intention is to level 4A or whatever it's technically. Plus. Our intention is to maintain that and hold that, and we have and we're working. We can talk to you in March, but we're working with National Field Days in terms of those conservation and environmental initiatives, and we are committed to what we can do in that space. But we need the big guns to perform.
Great. Okay. Thank you. And just a question for Nicola. Kia ora. There were some councils who weren't on board. How are your conversations going with them?
Absolutely correct. We had two that didn't come to the party with the last long-term plan, and some of those conversations need to wait for the next long-term plan transition. We do what we can by not utilising our ratepayer funding to subsidise other districts, and very aware of that. Hence, we've included them in the One Flight campaign, which was central government funded. But we constantly look at opportunities to wrap them in without it being our ratepayer subsidising that.
Right, thank you.
Donald.
Thank you, Chair. My first question is in terms of the risk profile for the airport. Borrowings have doubled. Investing cash flow outgoings are much bigger than the cash generation. What's the risk tolerance for further leverage within the $70 million cap?
And quite reasonable, but I think we're investing for the purpose of creating income generating assets. So we're investing diverse sort of the non-aeronautical portfolio with these long-term commercial tenancies, whereas I think previously a lot of the borrowings over the past decade were probably, or go back a little bit more than a decade, we're actually borrowing to fund the company's day-to-day operations and to fund just infrastructure renewal, whereas here this investment in the short term, as we talk about income streams coming online, that we will reinvest that income. So as the borrowings will peak, as the income streams come online, obviously with the commercial lease and the tenant moving in, there's a rental stream pretty quickly. We've already seen the aeronautical services we've invested, that's grown quicker than we thought. So I think you'll see debt peak. It will increase if we invest further, but we won't be borrowing money to sustain the current level of operation. We'll only be borrowing money to grow.
Thank you. And in that, I note your intention to grow your assets by $1 billion in the next kind of 10-ish years. My question is around if the core operating model is it generating a sufficient return on assets to justify the growth trajectory that you're planning for?
We can maybe tag
There is
team.
quite a big gap.
Yeah, well, I think you only have to go back 7 or 8 years ago, and the assets of the company stood at about 60 million, and they now will stand at between 3 and 350 million in that period of time. Again, we can't predict. A lot of our growth in the non-aeronautical space will be dependent on economic conditions perhaps outside of our control. But if we look at our modelling, we are right on. In essence, we are right on where we expected to be in 2026 in terms of that aspiration to $1 billion of assets that the company would own.
Thank you. Last question. Somebody asked about dividends. I'm curious what the rationale is to pay dividends when borrowing's increasing, there's aggressive investment spend, and we're paying dividends, or you're paying dividends. What's the rationale there?
I think it's an excellent question because because that is what the board grapples with, and that is the intent, and that is why I think the company set it on this course of action a number of years ago, very much with shareholder support, which was to minimise and potentially cease paying dividends whilst we were growing the business on the basis of those more extensive dividends would come in years to come. I think the board currently is weighing that future on the basis of also short-term requests from its shareholders. So it's a tension that the board looks at each year. But we have a dividend policy, and very much dividends are driven by what the directors feel the business should reasonably pay, respectfully, not what the shareholders may ask. So they will always revert back to the dividend policy. But your question is very valid.
Thank you. That's all my questions.
Councillor Huata.
Kia ora, thank you both for your presentations. My first question for the airport, in the statement of intent under Aotearoa Māori, is there an opportunity to include something that acknowledges the kingitanga?
I think the whole reason for presenting a draft SOI is to allow us to receive either via a letter of expectation or some guidance from the shareholders in terms of what you would like to see in the SOI. So there is nothing to preclude that, and if that request comes to us, perhaps via Sean, via the council, either via a letter of expectation or just directly to understand what you would like to see and what we're able to provide, happy to have that considered.
Thank you very much. I'll do that. Awesome. My next question to Nicola, Hamilton Waikato Tourism. In terms of your hosting, how do you identify who you host? What is the cost of hosting, and what's included in your hosting?
Kia ora. Hosting is typically around business event organisers, travel media, travel trade. So we'll look at where their audiences are, what their audience reach is, and is that a market that we need to be tapping into? So that's how we determine who we host. And then we'll also look at what their audience is to see what will resonate with that audience to inform where we will take them. Does that help?
Yeah, awesome. Thank you, Nicola. And one last question. How did HWT support the Te Matatini bid, and was there a cost?
No, there was no cost. We provided some data and stats of what the region and the city could host, bed nights and so forth, and some access to what other activities could be included in the bid. And then the committee have also got a large pile of our visitor maps now taking out and around the country and further abroad to further encourage everyone to come along, right? So yeah, that's out there now with the committee.
Beautiful. Thank you.
Thank you.
Thank you. I have one question in relation to the airport, and others have touched on it, but I'm looking at it from a slightly different perspective, and I'm looking at the statement of intent and the key objectives, and it talks about maintaining accreditations, continuing to do things, remaining collaborative, and I suppose it just has a sense of just continuing business as usual, continuing previous activities. And then I look at the financial targets, and my question really is, are you confident, or how confident are you that these objectives are actually going to drive a different outcome than what they've driven in terms of your financial performance to the end of the first 6 months of the financial year? Or maybe you could take that as feedback for the statement of intent in terms of showing some tangible connection between the objectives and the targets.
I would have suggested that the objectives as documented under our key objectives, and we've got KPIs that support those objectives. Yes. I'm not sure, and perhaps we could take that offline, Chair, because I'm not sure what further under an SOI we would or could provide. So we're very clear on the next 3-year period on the what we need to do as an organisation to grow both property and the aeronautical business, and we have a clear set of actions and activity and a clear set of KPIs that we report to the board on annually. So I'd be keen to understand where we're missing that connection for you.
Okay. And then the second question is around, you'll be aware that there is local government reform on foot and a focus on local authorities delivering core services. And I'm just wondering how you see, or whether you see council's investment in, the airport infrastructure is probably much clearer, but in property development, do you see that as being a core service of local government?
It's a much wider question perhaps than just the airport.
Yes, and maybe we can take it to the workshop.
But what I would say is that without, and I think Sean Murray alluded to this earlier on, without the diversification strategy that the airport has had, then we would have been in great difficulty. Most regional airports, particularly from COVID onwards, have required significant shareholder support, and the clear messaging from our shareholders probably 6 or 7 years ago was we don't want to have any exposure to a call on capital. We want the airport to be self-sustaining, self-funding, and to provide services that support economic development to the region. And I think that's exactly what we have done.
Thank you.
If I could add, airport models all around the world have to have a diversified revenue strategy.
Yes.
Aviation by itself doesn't pay.
Yes. We'll workshop whether that fits within the local government reform, which is a separate thing. So if there's no more questions, thank you very much for your presentation. I'm just going to move quickly to whether anyone has any questions on the other CCOs, and you're obviously welcome to stay because we'll have the debate around the motion. Thank you very much. Does anyone have any questions of the team in relation to the other CCOs? I would like to make one point in relation to the civic statement of intent. The wrong document went into the pack when it was originally released, and the correct document was put into the pack, I think it was yesterday morning. Because it was so late, we won't be dealing with that today, and that is the reason for the amendment to the motion, which delegates to the chair and deputy chair to work with elected members and endorse the statement of intent for civic once we've got a level of comfort or feedback from everyone around that. Does anyone, Councillor Bitter?
Thank you, Chair Rachel. This is, I think, for Gary. So Civic, point 16, notes an increase in activity in risk pool litigation. Is there anything we as EMs need to be aware of at the moment?
Given the period that we were a participant in risk pool, there's nothing in that period that I'm aware of. There is generally the activity that's risk pool managing is primarily around seeking underwriter protection against previous claims, and then on the flip side, underwriters to some claims are putting claims against risk pool members, but it is for issues that were outside our period of participation.
Thank you.
Mayor McIndoe.
Thank you, Madam Chair, and thank you for explaining what the error was that has led to the insertion of point C. I'm still wondering, though, whether the also, I am wondering if the wording of that is absolutely clear, because to indicate that we're delegating to the chair and deputy chair of the committee to work with elected members, should it not then say specifically on what, and then go on to say and endorse the statement of intent? From the outside, it's not entirely clear. Maybe I'm just misunderstanding it, but I think there needs to be something added there.
The intention is to work with elected members on the statement of intent for civic financial services, and ultimately either endorse or provide some, with the inclusion of feedback. How would you like it
When I read
worded?
it before, I was just thinking, I wasn't entirely sure. If others are comfortable with it, we can leave it as it is. My sense was that it wasn't entirely clear what the chair and the deputy chair were working on, but maybe.
Do you want to add?
Isn't just the word to instead of and? Elected members to endorse the statement. Subject to.
Oh, yes, that's probably correct.
Let's just do that little tweak, I think makes it make more sense.
To enable us to endorse, maybe.
Well, it says endorse subject to inclusion of feedback. Does that take care of it?
It might do, yeah. It's a small point, but I just, particularly for those who are looking at our minutes later, might wonder what that motion was all about.
With elected members too, and then also since Mark Morgan raised the matter of letters of expectation, and I interpreted Councillor Huata's comments to indicate that she would like us to prepare a letter of expectation rather than relying on Mark and your team interpreting the feedback that we've been given in this forum. We should probably formalise that in a letter of expectation to you and incorporate all of the feedback, including Councillor Meads around a bit of visibility in terms of the individual entities that form the group, and then one in terms of outcomes and objectives. So does that seem like a preferable process for everyone? Yeah. Okay, so can we make that change? Maybe subject to the inclusion of feedback set out in a letter of expectation that is to come. So they're just making an amendment to subparagraph 4, so that we're not just relying on what do we call it, RAL, to include our feedback in their statement of intent, and we'll deal with it via a letter of expectation that will come from the Finance Committee, which is within our terms of reference. Is everyone comfortable for us to move to debate now while they're working on the motion, or do you want to see it finalised? Yes.
If I can, Mayor, are we dealing with, on that workshop day, CoLab as well during that, all of that work, regional authority, or was that dealing with CoLab on that day, or is that separate?
Senior Councillor O'Leary, a question about the workshop in relation to RAL. Will CoLab also be part of that workshop?
No. Chair, if you wouldn't mind, if I could just clarify, the workshop at RAL that you're talking about is not a formal council workshop. It is a presentation, but that RAL are doing to all of the shareholding council elected members on site at the airport next Thursday.
Okay.
So it's not actually a formal council workshop.
Okay. So the answer, Councillor Mead, is no. Yeah. Okay, so this is the amended motion. Is that... I'll give you a chance to read it. No, that will be provided to RAL.
Yeah, that's the part that I'm trying to...
Thanks for your patience, everyone. It's now up. Does anyone have any suggested changes to what's up there? No? We're happy to move to debate. Does anyone have any debate?
No.
Oh, excellent. So, yes?
I'm going to support the motion, but I do want to signal that there are a number of things that we need to catch up on and change from here on in both CoLab and in Airport Authority, and others that would like to even see back to where that first statement of intent from councillors 6 or 7 years ago, what it was, what was written, and what we've agreed to for us as a new council to go through and see where and what we are being engaged with. But I will be supporting it at this stage, but with those clauses if I can.
I think that was it. So I'm moving the motion. Councillor Bitter is seconding. Yes. All in favour? Anyone against?
Carried unanimously.
Thank you. Right, it's lunchtime. Thank you very much, Mark, Scott and Nicola. Yes. Amy, what time do we come back?
1:45.
We will break for lunch now and we'll be back at 1:45. Oh, what? Did you want to come back earlier? Yes.
Sorry, so I'm back at quarter to two. Look, with your leave, because I've got to leave at 2:30, so
Yes.
I may miss an end report. I just wanted to, Sarah, I'm looking at you. I just wanted to say, as the longest serving person here, has known you for 4 years, because I may not get the
Yes.
opportunity. Thank you very much for your reports to this committee and also to council over the years. As our accounting manager, it's not easy probably writing reports about dry stuff like numbers and accounting, but it's really, really important. And I've watched you over the years when you've answered questions from elected members with a variety of our understanding how well you've done that. So you will be missed, and I just wanted to acknowledge you from the governance wing. Thank you very, very much. Wise are very lucky to have you, and we wish you all the best. So thank you, and thank you, Chair, for allowing me to do that.
Oh, no, hear, hear. Can I just check if there is any appetite to come back at 1:30 as opposed to 1:45 so that we can... Okay. Yeah. Sorry. That's okay. No, we'll come back at 1:45. Thank you. break. We're going to get started so that we can keep moving. We have some external guests who are here to speak to agenda items that were to occur later, which we've decided to bring forward because they have travelled from Auckland and Wellington. So the changes to the agenda are we will have the internal audit report first. We will then have the Audit New Zealand item. We'll then have the capital projects report, and we will conclude with the non-financial performance report. But just before we do that, and this is for the benefit of the public, which I should have said before we came out of public excluded, when we came out of public excluded time. During public excluded time, we had a motion from Councillor Bidder, seconded by myself and passed unanimously, to bring into the open particular or certain information concerning ombudsman complaints and information concerning compensation claims in relation to pockets of land known as Northview and Peacocks. That information will be recorded in the minutes for this meeting. So if you're interested in that, that's where that information will be brought forward. And now if we can move to the next agenda item, which is the internal audit report. Gary, would you mind introducing our guest? Sarah. Oh, Sarah. Oh, sorry. Thank you. Thank you.
So thank you, Chair. So this paper provides an update on the internal audit and assurance activity, supporting the committee's governance and assurance role. It includes, brings together 3 reports that have previously been brought separately. So the internal audit program, which is delivered by KPMG, the other independent assurance activity that's carried out across the organisation, and the update on the organisational improvement register. The improvement register provides visibility and accountability for how management is responding to assurance findings. So it's tracking actions, progress, and the embedding of improvements into business as usual. So this report is not about operational detail. It provides assurance to members that controls are being tested, risks are being identified, and improvements are being monitored and sustained. So with that introduction, I will pass to Matasa Ali from KPMG to provide an update on the interim audit activity. Thank you.
Kia ora. In terms of the internal audit activity, I've got 2 updates to provide to the committee. The first one is on the Future Fit Controls Impact Assessment. The objective of this audit is to provide assurance that the Council continues to have effective processes and controls in place following recent changes to structure, people, and processes as part of the Future Fit program. We are currently in the discovery phase, where we are identifying the areas with the greatest potential impact on the control environment. This approach allows us to focus our work through targeted deep dives rather than reviewing everything at a high level that was impacted by Future Fit. We will discuss the outcomes of the discovery phase with management and agree on the specific areas to be taken forward for detailed review. The second update is on the internal audit program development. Last year, we kicked off the development of a 3-year internal audit program. A key part of this was building the audit universe. Despite the name, it isn't a sci-fi concept or a parallel dimension. It's simply a comprehensive list of all council processes that could be audited. Big name, very practical purpose. We use this comprehensive list as the baseline for selecting areas to audit, with risk as the key deciding factor. This ensures that the internal audit program is closely aligned to Council's strategic risk, so we focus our effort where it matters most. That's why it was great to see councils actively reviewing and refreshing its strategic risk profile. That will be one of the most important input into the plan. The intention is to finalize the internal audit program in the coming weeks and bring it to this committee for approval in May 2026. Happy to take any question.
Thank you. I have a couple of questions. First of all, just in relation to attachment to business continuity, it's an action marked high in terms of risk. But it notes that it's delayed because of resourcing. And the question is, given recent weather events and this being about resilience, is the delay in training appropriate? And what do we need for the team to be able to prioritise this?
That is a question which needs to be directed to our governance and risk team.
Okay. So this schedule is prepared. We determine when things start, or
So I'm assuming you're referring to the item in the organisational improvement register.
yes.
Yeah. So this is an outcome of all previous things that have been identified, and is a matter of where we are, in progress, and the people responsible. I would need to have further information from the people that are marked as owners of those actions.
I'll take that offline. Thank you.
you.
Does anyone else have any questions? Councillor McDonald.
Thank you. I don't know if these questions are for here either, or if they need to be taken online. I don't know if the right people are here to answer them. But the first one is around the 9 high-risk findings that are currently delayed or not yet started. Of those 9, do we have a firm completion timeframe and firm accountability for who's responsible for doing that?
There is allocated responsibility and accountability for those items, and they are tracked. Some of them have a longer, obviously, delivery time period than others, and so it would be inappropriate probably to comment at a high level on all of them. Potentially we could include some reporting in the future as to where and when those may be completed.
So if I could add to that, Councillor McDonald, a number of those are associated with the procurement maturity assessment, and it's probably recognising the issue we raised earlier today that, although we have received it and we've started doing work on it, we're definitely not as far through as we would like to be, and therefore we need to create that sense of urgency. Once we develop the more detailed action plan, we will be able to define exactly when the target dates for those associated with the procurement maturity assessment are anticipated to be delivered on. I would expect that to be in place before we have the next meeting and to have been reviewed with the procurement subcommittee before then.
Thank you. So those are the procurement ones, but there are some that aren't related to procurement. And I appreciate your comment, Sarah, about difficulty to give a high level detail about it. But I guess I just want assurance that they're owned, that there are timeframes, and that accountability can be attached to those.
Absolutely. I mean, and this is why we bring this report to this committee, to make sure that accountability is retained.
Thank you. And the other question that I had in terms of delegating the authority to sign the engagement letter, can I have some confidence that...
This is not that item. That engagement letter is related to the external audit update, which is the next item.
Oh, okay, my mistake. That's all.
Thank you. Councillor Thompson.
Thank you. This is actually just a question in regard to how the table was presented. Becomes very blurry. It's just like a little bit blurry and you can't search it or anything either. Okay. Is there a way that we could look at doing that slightly differently? My eyesight's all right, but it was a bit of a strain. Thank you.
Councillor Casey Cox.
Thank you. Just a question, you mentioned before that because we're looking and assessing our risks, that would then feed into this. So would we expect to see this revised then, following the workshop that we're having on risks?
That's right. So, I mean, I understand that the workshop is taking place in April, and our program is due to come to the committee in May. That will allow us to take into consideration the updated risk profile.
Okay.
That is,
great.
yes.
Thank you.
I think that's all the questions. I think we can move into debate. Does anyone have any debate? Thank you. Thank you very much. I suppose just for myself, picking up on Councillor Thompson's comments in relation to the attachments, I think it would be helpful in the broader report if we at least had some reference to those high risks, not just in relation to procurement, but whatever the category is, what's happening with that in timeframes and what progress has been made in the meantime. And yeah. But other than that, I think we're ready to go to a vote. Can I have someone to move the motion, please? Thank you, Councillor Casey Cox, and a seconder. Thank you, Councillor Strange. All in favour? Anyone against? No. Thank you.
Carried unanimously.
Excellent. We can now move to the next agenda item, which is Audit New Zealand. Welcome.
Thank you, Chair. So this paper provides the committee with an update from Audit New Zealand. So it supports the committee's statutory assurance and accountability role over the external audit program. This report covers the progress on the planning for the 2025-26 annual report and the key risks and focus areas identified for the upcoming audit cycle. From a governance perspective, this update provides assurance that external audit arrangements remain appropriate and robust. Audit work is progressing as planned, and the scope of the audit in the year ahead is clear. So we have here with us Ethel and Kat from Audit New Zealand. You will see the engagement letter from Audit New Zealand is addressed to and to be signed by the Mayor. This reflects the legal audit relationship between the Auditor General and the governing body rather than the Chief Executive. So I will hand over to Ethel to provide an update.
Is that on? Yeah. Thank you, Sarah, and kia ora tātou, Council. So there's essentially 4 reports or audit reports in here from us. Probably the main one at this point, which is the audit plan, which is looking forward and looking at the risks that we have identified thus far on the audit. So I'll talk through that first, and then there's also an assurance report we did in relation to the what I'll call the debenture trustee, but essentially the security that that is over council's rates. So there is a report to the trustees who monitor that, and they require a report from us. There's also a report to last year's council, or the previous council, on last year's audit, and there's the engagement letter, as Sarah mentioned. So and I'll take those all as read, but I'll focus in on the audit plan, which is the forward-looking letter to the council. And it highlights the main issues that we see for this coming audit. It also has logistics, so when we plan to sign the audit report and the steps and timing of interim audits and other things through the year. We sign towards the end of October, which is your statutory deadline. The main issue in the audit plan is the valuation of your infrastructure assets, which are planned to be revalued this year. That's your 3 waters, your stormwater, wastewater and water assets, and your infrastructure transport assets. So those take quite a bit of effort for the valuers to update the fair value of those assets, and a bit of effort from us to work through those with them and management. Last year, for those that were here and those that have read our audit report from last year, we qualified the Three Waters valuation because we suspected that the value and management agreed had moved materially, but they weren't confident in the valuation last year to be able to book it. So we're expecting to get everyone to get comfortable, us and management, and for that to be booked this year. That's going to be an important set of numbers, because that will be part of the discussions around the transfer of those assets over to EOI Flowing Waters. The next key issue in there is around capitalisation of work in progress. So I've heard the committee talk a lot today about project management, procurement processes. At the end of all of that, the assets are capitalised into your fixed asset registers at a very detailed level, and then that sets the basis for the number in your balance sheet for your assets, but also for your depreciation going forward. So for a few years now, we've been just commenting that that capitalisation is a very messy manual process. The current management team are working on and doing some work in that space, so that's good, but it does increase the risk of error, so we do some extra work around that. And the last thing I will just mention is with the government's Local Water Done Well program, we've been talking to the EOI board and management about, and with the council management about the timing of asset transfers. So at this stage, that's 1 July 2026. So the annual report will have some pretty key disclosures about the implications of that for the council at the date you adopt and the date we sign that audit report on those accounts. The day after, at this stage, we're expecting those assets to transfer into that new entity. So the information about that in the annual report for your ratepayers will be very important and an area of focus for us. I will pause there. I'm not going to talk about the documents that are from the past, but I'm happy to take questions on any of those as well. Thanks.
Thank you. Do you have any questions? Councillor McDonald.
Thank you. I appreciate the messiness of trying to attach values to a whole lot of different moving parts. I guess I'm interested in if there are any obvious capital projects that have been sitting for a significant amount of time that sit in the balance sheet. I guess what I'm wanting to know is, are we carrying costs of projects that may never be completed, or is it common that we pretty much finish everything that we start and it's all tidy-ish?
We have quite a significant capital program, as you would know. In the past, sorry, I'll just refer to some notes that I just made earlier. So in the last few years, we've had about 5 million, roundabout approximately, per year that we've written off as losses on disposal. That's when we're doing renewals and potentially the full life of the asset may not have been completely used. From a depreciation perspective, that can be, depreciation is an estimate of the life, and so it's not always accurate. If you think that we've got like a $300 million capital program, that's a fairly small percentage of that. We also do have the other element of WIP reclasses. So that is when we are reviewing in the capitalisation process, we're reviewing whether the expenses that have been included are eligible for capitalisation in line with the accounting standards. Sometimes there is some elements of that we identify. And again, it's a fairly small value, probably around about $2 million a year that we've been doing over the last little while. So I would emphasise that that is not necessarily, it is within budget spend, but it just simply does not capitalise, it does not qualify for the capitalisation within the accounting standard. And then beyond that, you have some assets that are written off because they have been, council has determined to not continue to pursue that path, of which SchoolLink last year is an example. Those types of discontinuation are generally brought to this council, and it is decisions made by the council that cause those, those write-offs to happen.
Thank you, Sarah. And just returning to the letter of engagement, I guess I'm looking for some assurances that the high-risk items that have been identified, that there is a remediation plan, that they're being tightly managed, that kind of thing. Are you able to offer any comment on that?
So I'm not sure whether this connects to the remediation plan or the report to management. If it's related to the high risk associated to the report to management, which is the uncapitalised work in progress,
yes.
Yeah, absolutely. So we have recognised that as an area. We do not think it's actually significant financial risk, but from a performance to, as Athol pointed out, to ensure that there are no errors in it and to have complete confidence in that, we do need to get that work in progress down to an acceptable level. It is not there at the moment. I think that is what Audit New Zealand is pointing out. We have put an improvement plan in. We're monitoring that improvement plan, and we have seen substantive increase in it based on the focus that we've given to it. To put it in context, in December 2024, that uncapitalised work in progress greater than 90 days, so that means assets that we have put into use, but we have not yet identified all the detail and capitalised them, that was sitting at 474 million. At December 25, it's down to 365 million. In the quarter for December 2025, we capitalised 235 million worth of assets. In the quarter, for 2024, in the quarter for 2025, we've capitalised 419. So the remediation efforts to ensure that we're getting as much through as we possibly can have made substantive differences. I do not think we will be completely up to date by 30th of June 2026. I think we will be substantively improved, but we do expect to be up to date by 2027.
Thank you, Gary. Thank you, everybody.
Councillor Bitter.
Thank you, Chair Rachel. Firstly, forgive me for not being an accountant. I'm seeing a bunch of numbers here and I'm just trying to understand what they mean. So this is all in relation to the debenture. Firstly, there's reference to security stock, local government funding agency stock of $1 billion. What exactly is the stock?
Happy for me to answer that? Yeah. So under the debenture trust deed, which is the agreement that your debt is secured through rates, so this is your LGFA requires that to be in place so you can get good credit. You have a good credit rating and good access to low as possible interest rates.
Yes.
So for each of the debt that's on issue, you need a security certificate or a document that basically says this debt is subject to the security, which would be your rates. So it's just a legal agreement in relation to those securities. Yeah.
Right. So does that mean it's essentially equivalent to how much we owe the LGFA? That's the stock?
The security stock, you always want to be more.
Right.
Your actual debt, which is the principal amount outstanding, is the debt you owe, and that should tie up with your balance sheet at the end of the financial year. So we audit your actual debt, which is what you owe to LGFA and other parties. The security stock is a number that should be bigger than that because it's securing that debt over the rates under the trust deed, if that makes sense.
Right. So there's a note here that as of 30th June 2025, the Council had 26 billion units of security stock on issue associated with the guarantee. That's what LGFA's total lending across the country is, roughly?
Yeah, that sounds right. Yep.
Yep.
Wouldn't be yours. That would be a lot. Yes.
Yeah. Just going back to it secured against rates income. So if a council was to default, there's a charge against rates.
Yeah, there's triggers in those agreements with the trustees where that's right, the rates would be used as a way of recovering that debt.
Yeah, and the trustee is the LGFA.
No, the trustee is
Trustees, executives.
trustees, executives,
Right.
are appointed.
I see, yeah. Okay, thank you.
You're welcome.
Cox.
Thank you. Just a question, you mentioned the work that's underway in terms of valuing the water assets, and you said that we're taking some time to get comfortable, I think, with the new figures. So my question is, for the other water assets, we've done stormwater, as I understand. So we would expect to see new valuations for all of the water assets before July this year,
Sorry.
yeah. And then my question is too, if they are marked increases like we've experienced in stormwater, that will then have a resulting impact on the charges that EOI will be needing to issue. Yeah, is that a good?
I'll revert to your CFO because EOI is a whole new thing, really.
So, relative to stormwater, we've completed a draft valuation. We will complete the final valuation before the 30th of June. We anticipate that valuation being brought into the results for 30th of June. That valuation draft is indicating an increase, but not as much as was previously indicated last year. So the work we've done has identified, we think, a more accurate assessment of the useful lives and the contract values. With respect to the water supply and wastewater assets, which ultimately transfer to EOI, the core challenge there is the basis of fair value, which we have to set them at versus what they transfer at. So you are right, depending on the methodology applied to doing the valuation, that will impact on the depreciation of EOI. That will have implications for their future revenue collection. They will have to assess the methodology they use for doing valuation of assets. Although it is conceptually fair value, there are different methodologies applied quite often in the utilities industry. And so that is something their board will have to consider. And it's that will have implications for the question you're asking. We can't know what those will be until that work is done.
Okay, thank you. That's helpful.
No other questions? Councillor Mead.
Thank you, Chair Rachel. Just a question, if we have a quite a large revaluation in assets across the board, which is probable, how will that affect depreciation and debt cap and those sorts of things?
It definitely has an impact on depreciation. So depreciation is based on the new depreciated replacement cost. So yes, it has an impact on depreciation. Obviously, depreciation doesn't impact debt, and it doesn't impact revenue, and therefore it has no impact on those debt to revenue covenants.
Cool. Thank you.
Excellent. I think that disposes with all of the questions. Can I assume, Mayor McIndoe, that you're comfortable with the motion which delegates you to sign the engagement letter? Excellent, thank you. Can I have someone to, we have put the motion up? Yep. Does anyone have any debate? No? Okay, we can move to vote. Thank you very much for your presentation, for travelling, as I understand from Wellington. Thank you for your patience. Auckland, yeah. Thank you for your patience. Yes, someone to move. Could I just have someone to move the motion and to second it? Thank you, Mayor McIndoe. Someone to second. Thank you, Councillor Strange. All in favour? Aye. No one against? Anyone against? No.
Carried unanimously.
We'll move now to the capital projects report. Kelly. I'll just put, can I get the team to put up the motion that we have, which is slightly different to the staff recommendation? So just by way of explanation, the subparagraph C is a request to staff to include additional information concerning reasons for project deferrals or movement within future reports to the committee. So it's a little bit more, it's a request for more information in terms of why things are being, why they're asking for deferrals, bring forwards, changes and savings. And then B is really just for clarity. And so I'll hand it over to you now. Sorry. Oh, yeah. Council, yes. So we have someone to move. You can move. You can move. Yes, we'll let Mayor Tim. Thank you. So Kelly, we'll hear from you about as to your report. I think it would be useful, as discussed, to if you could speak to some of the reasons for the bring forwards and the deferrals, just at a high level, so that we have that understanding in terms of why you're asking for particular things.
Not a problem. Kia ora, tēnā koutou katoa. I have met most of you before, I think. So my name's Kelly Stokes. I'm the Unit Director of Design and Deliver, and my team gets to deliver most of the capital projects across Council. So I love road cones and footpaths and wheeze and poos and swings and all of it. So normally Ian Anderson, our capital accountant, would be presenting this paper to you all, but he's away, so I have the honour. Of course, the paper I will take as read, but also respond to Councillor Corralis's request. So this report, I'll just draw to your attention, we have deferrals and bring forwards of 28.9 million, which are detailed in attachment 1, which is the multicoloured table. Approved changes of 5.8 million, so the details of that are in paragraph 26 of this report. There's approved savings of 11.3 million, the details of which are in paragraph 27. And I would remind you of a comment that Chief Executive Lance made earlier, that there'll be a full Peacock report that will be provided to councillors within the next few months, with a full analysis of the entire program, including the benefits. I would also like to mention in paragraph 16, we have a typo correction. That should be the year 25-26. In paragraph 18, to clarify the statement, this $64.5 million referred to is actually for the entire financial year. It is not for the half year. And now to the request for some detail on deferrals. So I have a few pieces of paper here. So in some circumstances, we align the work with when we expect it will happen. So sometimes this relates to bringing work forwards, and sometimes this relates to deferring work. So we are generally doing that within the 3-year period that has been delegated for the LTP. So in terms of the delegation, staff are able to have some flexibility within the 3-year period, and that gets reported back to council, which is what the purpose is of these reports. So an example of some work that has been deferred would be some of the stormwater work, which we're doing to align with when we expect the developers are going to be working in that area. We made those estimates of when that work would be done based on growth projections at the beginning of the LTP, and that in that particular area, it may not have moved as quickly, and so we are rephasing the work that council would need to do in order to align with when that development happens. In some areas, we have brought the money forwards where it makes good sense to do all of the projects at one site at the same time. For example, if you're doing the roof on something, say the Wellington Street beach works that have been done in that entire site, so the erosion works on the river, the toilet block, the roof on the toilet block, and the enhancements to the site are all actually different projects that were phased at different periods of time, but it makes good coordination sense for it to all be done at the same time. So that's the types of things that we consider when we're proposing to defer some work or to bring some work forwards. That's what you're looking for?
Questions? Councillor Strange.
Yeah, thank you, and thanks for the report. My question, 26.2, increase in transport activity, safety improvements of 800,000 for the Claudelands Bridge. Can you please give us an update on that asset? I'm particularly interested in the proposed end of life for that asset, and just a little bit more information around that spend.
So I would need to come back to you with specifics of that project. We were really fortunate to receive co-funding from NZTA for the seismic strengthening work on that bridge. But the exact specifics of that project I would need to come back to you on.
Yeah, all good, thank you.
Lou.
Thank you, Chair. With capital project that we're doing now, there has the highest risk of cost overrun or delivery delays. And what are we doing to mitigate those risks to protect us, protect our financial interest?
So in the capital project commentary report on attachment 2, we've highlighted some of the key projects that would be in each area, where we've given updates on the status of all of those key projects. If you're asking for my opinion on delivery risk, so we forecast that we're going to do, or we plan that we're going to do activities within a particular year. The biggest risk to whether we do that, or the biggest influence as to whether we do that project in that year that's planned for or not, is actually the council decision-making process around whether you want to modify something or change something. So, for example, we go out for a lot of consultation on a lot of projects. As a result of the consultation, there may need to be modifications made to the project delivery. So actually that process itself could be longer or shorter.
Which ones that are we doing that has the potential of blow up the budget or delivery delays?
So I don't believe that any of the projects that are on this list will have risk of blowing out budgets.
Thank you.
Thank you, Kelly. Councillor Mead.
That's coming. Yeah, I'm thinking, Chair Corrales, just page 221, capital revenue, we've got NZTA subsidies of actuals, approved budgets and annual forecasts. What's that actually mean? Does that mean that the subsidy is 2.4 mil, or is it 6 mil, or how's that made up of? Is that all money coming this way, or?
So you're referring to the table?
Yeah, the little table.
Yep, that's in
capital revenue.
Yes. So, so the actual is how much has been received to date.
Yep.
Yep. And the approved budget is what we had accounted for.
Yep.
And the forecast is what we are expecting.
And that'll all come through as we draw down all that sort of thing.
That's right. So we do the work and claim the money back.
Okay. Thank you.
Thank you.
Can I just comment to Councillor Lou's question? So, Councillor Lou, I'd probably point to, I know you're asking for specific project components, but just in general in terms of overall financial risk. I'd probably point to attachment 1 and the components at the bottom where we separate out where projects have had increases to them, and some of those are not cost increases, they're impacted by the scope of the project having changed, and the savings. So if you look at that, the changes that have increased capital projects is kind of under 2.5%, but they've been more than offset in areas where we have come in with savings that are below those. So, you know, not always guaranteed, there's always risk with it, but that issue of looking at individual projects can be quite difficult. We tend to then try to look at portfolios, and we're progressing really well in terms of savings delivered that are more than offsetting where costs have gone up a little bit.
Thank you. Councillor Pike.
Thank you, Kelly, for the report. Just looking at stormwater, and can you just explain or expand a bit more on the changes in flood management level of service? On page 224 of Diligent, or the second page of the table on capital expenditure.
Oh, are you looking for what might have changed in terms of the projects?
Yeah.
So if I could look at one in particular, let's say the ICMP sub-program. So that consists of 3 different components. There's the largest component is a brownfield stormwater management, and that's at the Waitawhiri Frankton treatment. And the successful delivery of that project is dependent upon a successful and no bumps in the road at all consenting and approval process. So we're programming for everything to go really well, because we expect that we're preempting their questions, we're answering things really well, early stakeholder consultation, robust consent strategies, things like that. So that is, we're forecasting if it goes very well, this is what it will look like, and that we may have to modify things if there is a bump in that road, and that we would rephase that. So we wouldn't stop the project, it just may go a little bit longer.
Okay. My question was specifically on the flood management though, on CE 21031, the change in levels of service, just asking for a bit more detail on what that change, what it was.
Oh, so we would have moved some of that work out to a future year. It does not mean that there's no work occurring, but it does mean that things have been moved to a future year. Most of that flood management is related to developer access, so making sure we're putting it in at the right time.
Okay.
So if development's not occurring, we wouldn't put flood mitigation into that space.
Until people were...
That's right, right time it.
Yeah. Okay, so it's not necessarily a risk, increased risk to public, it's just about putting in the right projects when the people arrive, when the development occurs.
Yeah.
Okay, thank you.
Thank you. Councillor Moroney.
Thanks for the report. I'm not sure if you can even answer my question, but I was just regarding the savings of 9.6 million from the Peacocks development. Are there learnings from that? And what I'm thinking about is that if the long-term plan budget for that was, are there things that we could have done differently about it that would have made it closer to what it was actually going to cost, or are there significant things that changed in that time?
I might defer to my GM, Kevin.
Yeah, so sorry, through the chair. Like any project in Peacocks will be no different. We do a significant amount of lessons learnt in process once we've finished. As Kelly and the CEO have said, there is a wrap-up report coming, which will cover all of that in the space. But rest assured, on any larger project in particular, we have quite a robust lessons learnt process, and that'll be something that we'll be running through, any lessons.
Oh, thank you.
Cool.
Sorry, I missed that before.
Cool.
Councillor Mead.
Thank you, Chair Rachel. Just a clarification, are all of these capital expenditure projects already approved, or are they underway, or it's just a matter of when we do them?
If you're referring to this financial year, which is what this report is,
Yeah.
yes, they are all underway and they're approved projects. If you're referring to the key project sheet, or are you referring to attachment 1?
The attachment 1, item 7, all the colourful sheets up to the 31st of last year, they're ones that have been completed, or are they underway?
So these are CE codes, which are, there are projects underneath each of those CE codes. So they are all underway or progressing as per the plan. And if there are projects within there that we are required to come back to council for direction on, then we do so.
Thank you.
Thank you. Councillor McDonald.
Thank you. Kelly, you mentioned that things get bundled, and you used the example of Wellington Street. And so bundling things as they make sense, it's obviously really smart business. But looking at the big totals of the capital spend, the adjustments of bringing things forward or deferring things out, does the current program that we're looking at adjust the total capital expenditure over the LTP, or is it purely timing movements within an unchanged program, or is it growing?
What you've said is correct. They're timing movements within a agreed value. So, if, for example, things that have been brought forward have only been brought forward from year 3. So they're within the existing LTP.
Thank you. That answers my question. I had one other question, just to confirm so I've understood it correctly. Does the net effect of rephrasing these changes increase or decrease the total capital spend associated with the borrowing requirement, or is it net neutral?
I'll ask Gary to answer that one.
Against our setting of the program within the annual plan, it is an increase which does have an impact on our projected closing debt, but a number of those increases are in fact program work that was actually originally scheduled in 2024-25. We talked earlier about, pressure through capacity last year, and also the impact of the NZTA funding shift. That resulted in programs being delayed from year 1. When the organisation kind of reset that program, we wanted to make sure that we didn't kind of like overpromise and underdeliver. So we were probably more conservative in the level of capital programs that we put into year 2 versus what we put into year 3. What we've been able to do is probably identify that what was in year 1 got moved to year 3 is now coming back into year 2. So it does increase, sorry, long answer, does increase the debt relative to annual plan, but it is not increasing any debt relative to what the LTP expected. So the LTP expected that those capital programs would already have been delivered in year 1 or year 2. It just so happens when we did the annual plan, we had kind of shifted them out too conservatively.
No, appreciate that. That answers my question. Thank you.
It also answers mine, save for one, which will be a quick one. Is there any material impact from these movements on the annual plan work that Mayor McIndoe has been leading for 26-27?
So these components have already largely been embedded within the annual plan. So there would have been some implications that have been absorbed around the shift of that capital in the annual plan from the 26-27 into 25-26, but they have been largely factored into the draft annual plan modelling that we are bringing to council in April.
Thank you very much. There are no other questions. So we'll move to debate. Oh, thank you very much, Kelly. Yes. Do we have any debate? Councillor Bitter.
Thank you, Chair Rachel. This is the correct way to manage a program of projects over a 3-year period, responding to capacity and timing. It does create some challenges for governance oversight when we're looking at individual years, and I think that's why Chair Rachel has made this motion, because we just want to cover all our bases with clarity and oversight. The staff motion is a lump of asking us to approve a dollar figure of deferrals and bring forwards. It doesn't specifically refer to what the details are. We as governors do need to check that detail. We can go to attachment 1 and see a list of projects on a line-by-line basis where we see some figures, but we don't get the detail of why. There is another attachment that does give a one-line explanation for major projects, but we're missing some of the detail, hence the motion. The more detail we get, the longer the reports, the more we'll complain about the length of the reports. The less detail, the shorter the reports, the more we will complain about the lack of detail.
Good luck.
So we will always complain. That's our role. We're just looking for a small improvement, which will mean more reading for us, but better oversight.
Thank you. There is no one else in the queue for debate, so we can move to the vote. All in favour? Anyone against?
Carried unanimously.
We'll now move to the last agenda item, which is the non-financial performance report. We have Carmen here to present.
Hello. Kia ora tātou, ko Carmen Fortin toko ingoa. My name's Carmen. I will have met many of you before, some of you I haven't. So very nice to meet you. I am the policy advisor in the strategic planning and advocacy team, which is James Clark's team and Blair Bowcott's and Hannah Wendell. This report covers the performance of the non-financial service performance measures for the period of 1 July to 31 December 2025. The final report spanning the total of the 25-26 year will be coming to you later on as the 25-26 annual report. The service performance measures and their targets are developed through the long-term plan process, and these measures and targets are reflective of year 2 of the current 24-34 long-term plan. We have a total of 77 non-financial service performance measures, and some of these measures are statutory requirements with DIA determining how we calculate and measure these measures. Audit may also suggest changes, additions, or removal of measures within the development of the LTP. Currently, we have 51 measures on track to achieve target by the end of the year, 8 which are classified as may require corrective action, and 3 which are off track. There are 14 measures which are currently classified as no data due to the data being collected annually and the data not being available until the end of the financial year. Additionally, 1 measure will have a result of no data for this year. With these measures spanning all areas of council, I just really quickly want to acknowledge the staff who assisted in the formulation of this report, and note that although there's usually focus on the off-track measures and the may require corrective action measures, there's actually 51 measures which are achieving target, and some of them are actually significantly above the target. Just quickly going through those ones, or a couple of those ones, I won't take you through all 77, but the number of partnership programs delivered by our aquatics team each year, the target is 10, we've already achieved 16. We have responded to 100% of our urgent dog control requests within 60 minutes. Our average score across TripAdvisor and Google for the Hamilton Gardens, Te Whare Taonga or Waikato Museum and Gallery, and Te Karoro Nature Precinct is sitting at 4.7 out of 5. and the average consumption of drinking water per resident per day, which has a target of no more than 400 litres per resident per day, is currently sitting at about 297 litres per resident per day. We've also included in this report highlights that from the various areas over the last 6 months, and this is just a preview of what you're going to see come through in the annual report. And with that, I'm happy to take any questions, noting that there's some questions where I might have to seek some further expert advice.
Thank you, Carmen. Councillor Moroney.
Thank you for the report. It's really nice and easy to look at and get some really key messages from, and that's very useful. Poor old governance, one measure. And and if you don't meet an OIA request, one OIA request by one day, then it's a red dot. How do we arrive at just having one measure? And it seems very blunt. So just thinking about, what's our opportunity to perhaps broaden that out to governance being more than OIA requests? I'm assuming the OIA request, is that one of the ones that's statutory that you were
It is
referring to?
not.
It's not, okay.
It is one that we're able to look at through the 2737 LTP, and it's one that we do have flagged to take a good look at and see what other options are available.
Yeah, good. I'd endorse that. Thank you.
Just as a comment, Councillor Sue, whatever measures we may change or look at in the future, we've also got to be able to measure them.
Yes.
And that's
Yes.
that's the other element to this.
Right.
So maybe
Understood.
great to sort of have some creative measures, but if we can't
Measure them.
measure them,
Yeah. Thank you.
Councillor McDonald.
Thank you. Really great report. Thank you very much for that. Thinking about, there's a whole lot of projects, a whole lot of measures that are noting or tracking as being on track, which is excellent. Has any assessment been made as to whether those levels remain appropriate in the current fiscal environment?
I can answer the question in terms of, from a reporting perspective, having published them within the long-term plan, unless there is legislative changes for the ones that are dictated by legislation, we are not able to change what we report against in the annual plan process. Annual report process.
That aren't dictated by legislation?
No, similarly, so to both. So what I'm saying is, if you put it in your LTP, when you report for the next 3 years against your annual report, you are required to report against those measures. There are a number of them which are dictated by legislation amongst that mix as well. The only reason you can change the reporting is if the legislative direction or the regulation direction from DIA, for example, was to change during that period.
Okay, I understand that. Thank you. Along that same line...
Councillor Mesh, I just wonder, I might just invite Hannah just to speak about our thoughts as we look to the LTP, because it's a great question you've raised. Hannah, do you want to...
I guess just echoing what Blair said previously, our team's already started doing some thinking about the process we might go through with that Mayor's Plan lens, now that it's the community outcomes, how we would set up those new measures to match the levels of service that you will help determine over the next few months.
Thank you. It's great to see that being built in and front-footing it. My next question is around how financial sustainability can be integrated into some of these service performance dashboards, particularly in light of our lower income, soft development contributions and rising borrowing. Can it be?
Good questions, and I guess I'll probably just elaborate again. More than happy to look at all of the different ways that we can amend our measures as we move forward. In terms of the reporting, I'll leave that to our finance team. But yes, agree we can look at that as one of the aspects as we go forward.
Thank you.
Councillor Casey Cox.
Just because we've had lots of discussion on risks today, so the strategic risks would also inform our measures and have done and will do.
Yes, we actually had a conversation after this morning about building a closer link with our strategic risks and organisational risks into the decision-making for the LTP. So I think you'll see a lot more of that connection as we go through the workshops.
Great, thank you.
Excellent. No further questions. Does anyone have... Oh, let's put the motion up. Can we have someone move the staff recommendation? Thank you, Councillor Mead, and a seconder, Councillor Pike. Thank you. Does anyone have any debate? No debate. Thank you for your report, Carmen. I just want to say it's really good to see the level of activity across the organisation, and it's great for the community to see what outputs are happening as a consequence of the investment into the staff and contractors to deliver services. I think there's lots of positives to take from this report. And as with all of the reports that we've spoken about today, we are on a pathway to continuous improvement, and it's going to be good to have input into the next thing as we move into the next LTP. If no one else wants to debate, we'll move to the vote. All in favour? Anyone against? No?
Carried unanimously.
Just before we say the closing karakia, I just want to thank everyone for all the work that went into the agenda, all the work that went into making this meeting run as smoothly as possible. But in particular, I really want to say thank you to the elected members and the engagement and the positive messages that we're sending the organisation in terms of our investment into things like conversations about strategic risks and so on. So thank you very much. Yeah, great. Oh, thank you. Yeah, thank you. Thank you. Right. Tēnei te whakakuri, tēnei te whakawantia, haumea, hui, tai ki. Thank you. See Maria. Thank you.